All right. We're here today. Another episode of Confessions of a Street Broker, and was a longtime competitor, but always a good friend, and made the jump to the other side of the principal side. I kind of followed his path too. So, but good buddy, Clint Riley, Reserve Capital Partners. What's up, man?
Hey, Jeremy. Thanks for having me. And yeah, you did make the jump to the wild side.
Yeah,
you probably should have came and asked me and let me give you a bunch of disclaimers and warnings and tell you about all the people and overhead and risk and all that stuff that goes along with it. But
yeah, I'm in it now. So, for all you brokers out there that think we just make a bunch of money, don't forget we got payroll every 2 weeks that we got to hit.
Yeah, it's a pretty complex series of events that have to happen to make it work. And make money. So.
Yeah. Well, I want to start with the hair. The hair, man.
Yeah.
Tell us the story on the hair.
Yeah, I was telling you a little bit earlier, but I, we do some industrial, some development, some office, and about 24 months ago, we had an office deal we were ready to exit. You hired Newmark, put it out on the market, got several offers, got a contract for $39.5 million, about to have a big exit, and the Fed raised interest rates 75 basis points. We were at the beginning of the inspection period, the buyer kept going, and then before we got to the end of the inspection period, the Fed hit it again, 75 basis points. I'm like, and I knew it was coming. Buyer calls me and says, yeah, man, we're going to need several million off to make this pencil. And of course, we were like, nah, we're not. We're on business plan. We're 90% leased now. We can't do that. But at that moment in time, I realized, all right, this is gonna cost millions. This is gonna be a pretty bad deal. So anyway, not a lot any of us can do about it.
Yeah.
But I just thought, you know what? I've had a military haircut my whole life. I'm just going to grow my hair until the Fed realizes how much money they're costing us real estaters. So here I go. I've got like a weird ponytail.
Yeah.
And it's very shocking to people that know me because it's really not. Yeah. It's really not who I am. But here we go. We still got it. We're still going to have it for a little while. It looks like here, and just silent protest. My team's all give me a hard time, and like we'd make an exception, but I'm sticking with it. Like they've cost people like me and you millions of dollars.
Oh yeah,
in the real estate business. The real estate business doesn't function with debt at 8.5.
No,
I mean you amortize that on a 15, 20-year deal. You got 11 or 12% debt yield.
Yeah,
and the industry just doesn't work.
Yeah,
I mean, look, we can get by. It's going to be fine. But long term, the industry doesn't work under this interest rate environment.
No.
The way that we know it, at least. I mean, you'd have to go back to a kind of 80s, kind of late 80s era view on commercial real estate for it to function. And it didn't function very well, not near as well as it does today.
No. Well, I think the other thing that the reason it has a hard time functioning at these interest rates is because the run up in the beginning was so quick. And I've kind of said this lately. I've seen, I feel like better yield or a better investment in the larger institutional deals right now because they understand the mechanics of capital markets versus the one-off mom and pop that's had, 200 brokers through their front door and all these offers sitting on their desk, in 2021, 22 for $150 a foot. And they're like, well, my building's probably worth $200 a foot now. And it's like, no, it's like worth $100, and that disconnect there. And I feel like, the larger REITs or whoever coming off redemptions or anything like that are giving more of a discount, or they're pricing things to what the market really is today. So, So yeah, it has been a non-functioning. We have not bought near as much as I had planned to buy, just because math don't math. So
yeah, I'm with you. I think the sub $5 million, you can make either a need decision, or an emotional decision. But you're right. Once you get to having to get institutional capital or sophisticated lenders involved, I mean it's a return in a math risk matrix equation, and that real estate's a really big piece of the factor, right? Yeah. And but I think you're right. I think that's why the prices, like user prices, have kind of held, if maybe not went up a little bit, which is shocking.
Yep.
But I think in the larger deals, I mean, there's quite a bit of turmoil out there. Certainly in the office and multifamily sector, even the industrial sector. I mean, we built some industrial, and some of those trades were 3.75, 4, and today those are 5, 5.25, 5.5. And, those are meaningful.
That's impactful.
Meaningful impacts on your developer return and your LP returns.
Well, okay. So let's go into let's just start from the beginning for Clint Riley. Where'd you grow up? Where are you from?
It's an interesting story. I don't deserve to be here. Yeah. I grew up 9 miles down a dirt road and outside of Crockett, Texas.
Yeah.
My mom and dad were divorced when I was 6 or 7 years old. And, my mom was a school teacher and she got remarried a few years later. My dad was a timber buyer and, great people. But, I lived 9 miles down a dirt road. We drove a minivan to school and got stuck half the time. Went to a little 1A school and, nothing wrong with that. But,
yeah.
When it got, I played at, when 1A school, you play varsity everything if you have a pulse and you want to be.
Yeah.
So, 16 years old, and I think my dad just kind of sensed you need to go to work. We were playing. I never forget. My stepdad. We were playing basketball in the front yard one day, and he's like, "I think you should probably get a job." And I looked at him. I thought about it for a second. I'm like, "Hey, I think you're right. I think that's good." So I went to the local grocery store and got a job sacking groceries, and I just like to work. 2 weeks, they were like, "Hey, you want to be on the stock crew?" And I was like, "Yeah," and it just kind of a year later, the guy that was running at HEB in that town called me. He's like, "Hey, will you come run I was still in high school. Will you come run frozen food for me?" I'm like, "Yeah, I'll come run frozen, maybe $10 an hour, whatever." And did that and got to be a senior in high school. And they're like, "Well, you going to go to college?" I'm like, "Yeah, I guess. I mean, I'm having a good time. I think I'm going to college, but I really wasn't that serious of a student. I was just working, playing sports, doing what kids do out in East Texas." And my grandfather growing up, he was retired. He didn't even have a college degree, or I don't even think he graduated high school. But every Saturday, Sunday morning, I'd go over there and he'd sit down, when you got the print Wall Street Journal with all the lines, and he'd get a slide rule out and pick stocks, So they're like, "What are you going to do in college?" And all I could think about was maybe I'll just go be a stockbroker. Yeah. So when I went to, I got into Baylor, A&M, and Sam Houston State, and I went to visit A&M, and there was 50,000 people there. I graduated high school with 28 kids.
Yeah.
So I'm like, man, I couldn't afford to go to Baylor. There's so many people at A&M. I didn't think I could do that. And so I went to Sam Houston, and I showed up there, and they're like, "What do you want to study?" And I'm like, "I guess I want to be a stockbroker." I didn't even know if there was finance or economics or any of that.
Yeah.
And they're like, "Well, maybe you'll be a finance guy." And I was like, "Hey, I like it." So I was always wondering if I was going to make it through college. I just didn't know. I mean, I smart, but she wasn't that interested in being a good student. But anyway, I got into finance school, did pretty good in college. I didn't rush fraternity. The first year I just focused on school. I'm like, man, I'm just going to put my head down and study and see what that's about to be sure I could do it. And then the second year got in fraternity, and then I actually met my wife.
Yeah.
In math class, oddly enough, that I wound up failing. So, very strange, very, very strange story, but, graduated with a finance degree and figured that out. But I had really no idea. Once I graduated, I had no idea what to
what was next.
Where do you go with that?
Yeah.
So a recruiter came to our college and said, "Hey, we want to hire you to be a finance guy at a car dealership." Yeah. I'm like, "Hey, sounds great." It's like, you're probably going to make $100,000. And man, in 2002,
that's pretty real
for a 22-year-old. That was pretty real money. So, interviewed me a few times, and I'm like, "Yeah, I'll do it. I don't have a lot of other options," and I didn't want to be a insurance adjuster. They had a lot of entry-level jobs. I didn't really want to do that. I wanted to try to go make some money.
Yeah.
And so I showed up at a car dealership in Houston. I rented an apartment for 6 months. Thought I was a finance guy, and they had a stack of business cards there waiting for me that said Clint Riley, car salesman.
Oh.
Yeah. So I was like, well, yeah, this is awesome. Got this finance degree, and but I just put my head down and went and sold cars.
Yeah.
And I did it for 2 or 3 months, and then they fired somebody in the finance department for forging a credit app, and they're like, "Hey, batter up, you're in finance." And that went terrible because it was, back then they'd send you to school and teach you to package sell. Hey, I just sold you a credit life, disability, death and dismemberment, and all this insurance coverage. Nobody knew what it was. And so at the end of 6 months, I was like, I'm not going to do this. Is not a career for me. So I resigned from that and, got married 2 weeks later to my wife, both of us ripe old age of 22.
Yeah.
And, what I learned in that experience is like to be a salesman, like in that business, you have to approach people and know about your product and have a value proposition, go into a pricing plan, and then you have to make close. So, I learned, had I not done that, I probably wouldn't have had a chance to be successful at what we, what you and I used to do. Yeah. So I think that was, and man, I was working 100 hours a week, and I'm like, all right, I'm going to settle down and try to figure out, I want to have my marriage a chance to work.
Yeah.
I want to have a place where I can have a chance to build a career that's sustainable.
Yeah.
And I didn't know anything about commercial real estate. My uncle performed our marriage ceremony, and he had went to school with Floyd Bates.
Okay.
He's like, man, I know one person in Dallas. He was my college roommate at Sam Houston. He went to Sam Houston too, and I'll give you his number. When you get up there, call him up. So my wife had a internship for the General Service Administration, making like $15 an hour.
Yeah.
We rented the cheapest apartment you could possibly get in South Irving. I mean, we had a community washer and dryer.
Little crooked eye. There you go.
Yeah. I mean, we had about $600 between the two of us when we got married. So I went to work for Floyd and Richard as a commission only,
no
real
draw.
estate guy.
Did you get a draw in the beginning?
I think I got $1,000 a month draw for 6 months. 6 months. I mean, so
mine was $2,000. Jeff was very generous.
Jeff was generous, yes. And I just didn't have options. Yeah. I mean, it wasn't that I thought about it and I went to interview with CBRE. CBRE wouldn't even talk to me. Nobody's going to talk to me.
Yeah.
So I had a lot to prove. I had a lot to learn. And, I showed up and, didn't have CoStar and I didn't have client books or teaming or any of that stuff. And but I think the one thing that Floyd said to me was, hey, man, if you just do half the deals on Ambassador Row, you're going to make $200,000 a year.
Yeah.
I was like, and you broke that down into some terms that I can
understand.
Get my arms around.
Makes sense.
Right. And, man, the rest of the story. Yeah. You just wear out shoe leather and go cold call and learn your market and do what you say you're going to do. And you just keep doing it. You either keep doing it or you quit or starve. And I didn't have a plan B.
Yeah.
So I just wore out the rows, and just kept doing it. And till I started making a little bit. And it took me a long time. I didn't start, like I said, I didn't have a client book. I didn't have a database. I didn't have CoStar. So, man, I'd really just have to cold call and kind of remember it in my mind. And, back in that time, it was like 02, 03. I mean, your brother was like king of the universe. I mean, he had market share and he was doing 95% of the market share. So there wasn't actually a lot of room for a lot of us guys to even make money.
Yeah.
And, it was a good time to learn the business, learn how you do it, see what stuff's worth. And it took me probably 2 or 3 years of just kind of doing the same thing to where I was really even enough money to keep making enough money to keep the lights on.
Yeah.
So that's kind of how it started for me.
So y'all didn't have CoStar?
No. I remember having to sit down with those guys saying, hey, man, I really got to have, Stream had been recruiting me.
Yeah.
I was like, guys, I really got to have CoStar. Like, I need some tools here.
Yeah.
Because when we had a black book, I don't know if you ever remember that guy, but there was a zip code book.
Yeah.
That you go to 75249 or whatever, and you'd go to Ambassador Row and it'd tell you. But that information was all 2 or 3, 4 years old. So the decision maker may not be the same guy, but at least you had something to go with. But
you know what's crazy? I have never made a deal on Ambassador Row. I have never done a deal on Ambassador Row.
I did. I'm going to go out, probably go out of sequence, but 8700 Ambassador Row. You know that one, the clamp paper deal. Mm-hmm. Yeah. So I had put Jim Frank in there for like $2 gross, but he was going to lease it. And he's like, man, I need an option to buy it. I may want to buy it. I'm like, why would you buy it and lease it for $2 gross forever? You get flat rate deals back then. So we got an option to buy it for $21. So about 3 years into the lease, he calls me. He's like, hey, I need out of my lease. I'm like, well, I don't think that's going to work. And I looked at the lease for him, and they hit the Barnett Shell under a bunch of property, and changed people. A lot of people got rich overnight. So he's like, man, I don't want to sell furniture anymore. I want out of my lease. So I'm like, Jim, the only thing you can do is take this option and you have a right to buy it for $20 a foot. It's like, well, can you resell it for more? And I'm like, I think I can.
Yeah.
So like, I'm going to need a couple of months or 6 months or something. But back then you couldn't, it'd take you 6 months or 2 years to lease or sell something. It wasn't like it is today. So he's like, I won't do that. He's like, you have to sell it the same day. And sure enough, I found somebody. So he exercised his option, and then we double closed it on the same day.
That's awesome.
And that's probably when I first realized, all right, I can make money doing this. Because I probably made a 5 or 6% fee on both sides, both the same day.
Mm-hmm.
I was like, all right, there's a way to make real money doing this, because we didn't make a lot of money. We'd sell stuff for $20 a foot.
Yeah.
$2 gross leases flat.
Yeah.
And back then, we're like, man, we're kind of flunkies. So we want to be office brokers. Those guys are getting paid on $20, $30 rent. We're getting paid on $2 rents. And Jeff's got 95% of the business.
Yeah.
I mean, it was tough sledding back then.
I did a 13,000 foot renewal this year for a client, and I was like, this is like a sale from when I started. Because the rents were so high. The fee was like $25,000. And I was like, "This is that's what I used. That'd be like a great sale fee back in the day."
Yeah,
it's so I never did a deal on Ambassador Row. The deal I didn't make on Ambassador Row is the deal that really pushed me into being a principal, and that was the Global Views deal.
Mm-hmm.
And Global Views, it's 242,000 feet. I had this broker out of California had the listing, and he had no clue what it was worth. He was a Newmark guy or whoever they were at the time back then, or might have just been Newmark, but he was this guy's guy, and that owned the building and wanted to sell the building for $31 a foot. And the next door building, ML had just bought for $42 a foot. And I think Scott Gregory flipped it. I think Caddo bought them, flipped them to ML, $42 a foot. They were better buildings. This Global Views was like 242,000 feet, and probably about 200 of it's 16 clear, which for a user that size, it's kind of a low, lower clear. Pretty good for Brook Hollow though, And I got it agreed to at $31 a foot, and I was like, I was just running back to the office like, everybody back the truck up. We got to buy this thing. And I was trying to like get people to buy it with me, and I would get them to meet me in Uptown. I was like, meet me in Uptown. I'm going to drive you to this building. And I would drive them all. I'm like, just look out the window and look at everything that's getting built, and here's where we're going to end up right here. And it was crazy. At the time, I had Global Views, and I had the site across the street that's not racetrack anymore. I had that directly with the bank because they were foreclosing on it, and I couldn't get anybody to believe me. And then I tried to sell it to ML, and they're like, oh, clear house too low, blah blah blah. So I got the contract, and I needed $100,000 in earnest money. I didn't have it. So like for 3 days, I tried to scrounge up $100,000. I couldn't figure it out, and just let it go. And then Entrada bought it, and a year and a half later, they flipped it for $57 a foot to Stone Lake. And I was just like, I got to figure out how to get money. These guys.
I had a deal like that. I bought 1108 Quaker one time.
I remember that.
For like $16 a foot.
I think I evacuated everybody because that was the foreclosure building, right?
Yeah.
The snakes in it and all that stuff. Yeah.
It was 40,000 front park rear load, 18 clear or 20 clear sprinkler on Quaker for $16, $17 a foot.
Yeah.
And I was afraid I wasn't going to get the money for that.
Yeah.
And just get you thinking, like, I got to be ready. Like, 'cause those opportunities are thin. I mean, the market doesn't stay there long. The market gets there for 6 months or 12 months, and it's usually really scary times when nobody wants to do anything.
Right.
Right. So
what? Well, okay. Sorry to derail us there, but yeah, Ambassador Row. I'm still like, I've still never figured out that conundrum. I think I've done every deal on every street probably twice, except for Ambassador. Never. But okay. So when did you start with Floyd and Richard?
January 03.
January 03. And then you moved to Transwestern at what point?
I did, I think, 7 years with those guys. And really when the Great Recession happened, I think it was November of 08. I was kind of looking at my deal log and what I had under contract and what I thought I was going to make. And all my buddies were complaining, like, man, all our deals died. We don't know what to do. We're going to go broke. And I was like, man, I'm doing pretty good. I was feeling pretty happy, and went home for Thanksgiving with my family. Like 8 or 9 deals under contract. Came back that following Monday after Thanksgiving. And that week, every buyer called me and was like, hey, we're just going to we're firm. We know we're supposed to close next week. There's no way we're closing. And at the end of that week, I looked at my book of business and I was like, yeah, this is over for a while. And I thought, well, I can just sit here, or I can go use the next year or two trying to figure out if I can get better, you know? And I'd had enough tenure where people were starting to recruit me.
Yeah. And
I just thought, you know, I ought to go to a bigger shop, maybe a national shop, figure out, am I missing anything, or the things I can do better? Can I grow?
Yeah.
Because at that time I was probably only, 29, 30, you know, so I still felt like I had some things to learn. And they'd been recruiting me, and I just told them, like, hey guys, I'm probably not prototypical, national tenant rep or kind of what you guys are. I'm a street broker.
Yeah.
I'm going to be down here in my own little thing. I don't really need a lot. I need a good admin, decent marketing support. And by the way, I'm like half investor. So if that's a problem for you, let me know. And, they actually kind of like that. So, showed up and, was a pretty instant producer.
Yeah. And
they kind of left me alone, and I did my thing, and, learned how to work at a bigger shop, and kind of what was great about that and what wasn't great about it.
Right.
And I did 7 years there, became a principal pretty early during my tenure there, and made some great relationships that, that I still have today and I'm proud to have. And then I kind of got that itch.
to go to
a couple of guys were telling me, they're like, do you know you're really an investor? And I'm like, yeah, I know I'm an investor, but I have a book of business. I like doing deals. I like brokerage. Like, you need to go raise some money and do that. Yeah. So anyway, about 2016, John Fulton walked in my office and he's like, well, I was at DCC and I heard you're raising a fund. And I was like, man, that news travels fast, because I hadn't even raised any of it. I really hadn't even raised any of it at that point. And I was like, well, yeah, I think that's true. And he's like, well, just let us know. Like, hang out here and let us know if you get your fundraiser. They're very, very cool about it, actually. Yeah. And went and raised a little GP fund and got going.
That's awesome. So what, when you made the transition from Bates Myers to Transwestern, I've never made a transition in brokerage, but, a lot of people listening to this probably have, or maybe are considering that. Like, was there a ramp up time? I feel like when you kind of start new things, there's always kind of like a gyration period or did that kind of go pretty smoothly for you?
It went pretty smoothly for me.
Yeah.
I always had pretty loyal clients, and I was always working pretty hard. So it wasn't a big deal. I mean, thankfully for me, Transwestern didn't put a lot of pressure on me. They didn't show up and say, hey, you got to produce 800 year one or anything. They just said, hey, we know you know your market. We know you're going to work hard, and showed up there and did that. And it paid off pretty quickly for me.
And then, so when you make that transition, do you feel like you got anything out of their platform? Did you have any inbound stuff that kind of, that's in my mind, that's kind of the allure that you might see as like, hey, I've got this book of business, but if I go to get this business card, I might get some larger inbound stuff. Or
that never happened for me. But I didn't care. I wouldn't go. I knew how to get my own business by virtue of where I'd been. I was used to getting my own business.
Yeah.
So that really never happened for me. I think what happened is just the level of sophistication of the people that I was around and the talent that I was around, helped me kind of elevate my game and like feel like, all right, I can do that and think a little bit bigger.
Yeah.
When I showed up, they're like, hey, we like to work on deals that are 50,000 feet and bigger. I never thought about that before. I just work on anything. Right. Hey, you need 3,000 feet?
Okay.
If I got time, I'll run you a survey and go on some tours. And I think the best thing that happened there is I started kind of believing in myself. Like, hey, you can do as big as you can dream. You can do that, So being around some of those people, and I just made some really great relationships and friends there. I mean, at the time there was, me, Brad Struck, Jim Hazard, Ward Richmond, Brent Landry, Sharon Morrison.
Yeah.
Greg Cannon, So we just had a team of guys that were good at real estate.
Yeah.
And it's pretty special season.
Yeah. I don't know that it's I don't call it a regret or anything, but I've never really worked anywhere. And so I don't really have a lot of perspective of that. And so like I try to absorb that by, getting, like bringing Will over from Holt Lunsford, like he's been in a whole different machine and has all these different ways of thinking that I didn't know existed. It's just like, you just don't know what you don't know, and that's the one thing I don't think I've ever gotten from working for myself the whole time, but it is what it is. But I could totally see that, just understanding how other people do things might be the same things, but they do things a little differently, and just expanding your mind essentially to those concepts. So,
yeah. I mean, we had a teaming culture, which I had really not been a part of. And I'm like, that makes some sense.
Yeah.
That's how you should train a young guy. You should put him on a team, let him get some reps, let him help. And so I think that was something I picked up there too. I mean, we still use today in our business now. It's like, man, if you can do your job, do a great job at your job, and then if you can help your buddy with his, go help him too. It's like being an offensive lineman.
Yeah.
I mean, if you can block your guy, then what do? Go block another guy.
Yeah.
And I say that all the time.
Yeah.
And I think teams function better, and it's good. It's also good to be a performer on your own, but good performers raise everybody next to them. They increase their level of play.
Yeah, no, so, it does. It, when I was hard brokering, I felt like, we had a good little group over there at Mercer Company, and it was like, I'm in there every morning with Boozer and, Adam Kern and a couple other guys, and Jeff still, he's player coaching it and all that stuff. And, Boozer was a guy that would really rise you up, because that guy was probably one of the most competitive human beings I've ever been around. It's interesting, brokerage has kind of always been an individual sport, in my opinion. I've seen teams. I don't really know how they operate. I never really had a true team. I always say if I was on a team, I was always kind of a shitty teammate, because I would just take the ball and just run with it and just be like, just give me the ball. But we were kind of talking before we started this, how, you get into this, you step onto this side of the equation, and, you want to just go do deals, but you end up having to have a team behind you. And, something interesting I did was, when I was kind of transferring into this side of the deal, I actually hired a coach, and he's like, what do you want to do? I go, this. He goes, dude, you ain't doing all that all by yourself. And I was like, okay. I was like, me and Isabella? He's like, no way. It was so funny. We had our quarterly meeting our last quarter, and we were in the meeting. I looked at Isabella and I go, I think you need an assistant. And the look on her face was just like, thank God. It's but I've learned how to build a team and try to put everybody in the right place. But I mean, that's a whole nother aspect. You can't buying a building and taking it down from A to Z, or from not even just taking it down and executing the business plan. Man, it takes an army. So,
yeah, when I started, I thought, man, I'm just going to buy some deals. I'm going to take the pressure of brokerage off. I had built a good enough net worth that I was going to be able to pay, keep my kids in diapers and pay my mortgage and all that stuff.
Yeah.
I'm just going to go buy some deals. But what happens if you start raising outside capital is, you got to account, report to lenders, and we wound up buying office pretty early. Then we had to have engineers, property managers, day porters.
Yeah.
And then the more property you get, the more accountants you get. And then you got enough accountants that you got to get a CFO. And, the whole thing just grew into, a platform that, we wound up just putting money back in, for a long, long time. Because you want it to be something you're proud of. It's like, I want to just buy deals and not have a platform, or if I'm going to have a platform, put my name on it.
Yeah.
I want to be sure it's awesome.
Yeah.
So getting a platform from startup to awesome is hard. It takes a lot of capital and a lot of years.
It's a business. It's a total business. It's not just buying real estate. So when you decided to raise your fund, what was the buckets the fund would go play in? Was office in that bucket?
it was important for us to do like only things that we had done.
Mm-hmm.
So clearly I'd done a bunch of industrial. I had done some office, albeit pretty small office. And I had done some self-storage, rent conversions back then. You could buy an empty Walmart or an empty office building.
You did that with the bowling alley in Irving.
Yeah, that's actually how I got the construction company. I bought that thing for $8 a foot.
I used to live there on the weekends in high school.
What was the third story?
No, I never made it to the third story.
I went up there and there was like faux fireplaces, mirrors on the ceiling, green shag carpet.
Yeah.
There were some things going on back there.
The champagne room.
Yeah, back in the 70s or 80s, there was some stuff happening there. Bought that for $7 or $8 a foot to the building.
Yeah.
And, that's honestly how we got the construction business because we hired a contractor from, somewhere Lake Kemp or something like that. And the guy ordered the wrong elevator. So when you order an elevator that's 6 inches wrong size, guess what happens?
Everything's
you
off.
You got to order another one, $700,000. They don't give you your money back. And then you got to wait another 6 months. So it costs you $600 and you burn 6 months. So that happened. Then that thing had asbestos everywhere. Yeah. So we had a not to exceed asbestos contract for $250,000. Well, the asbestos contractor came back at the end and said, well, now I need $600. I'm like, what do you mean? You got a max contract of $250. And he's like, well, I found a lot more. And through that whole process, I was like, if I'm going to do this of any kind of scale, I've got a contract. I got a problem with this construction piece. And a lot of real estate, as you know, a lot of real estate has a construction component. Whether you're adding a building or you're adding 3 acres of pavement or you're fencing it, or if you're buying an office tower, you're probably doing corridors and TI every time you make a lease. So even before, we started Capital, we actually had the construction business because I was like, man, I know how to do a lot of things. I know how to buy showrooms and fix them. I know how to buy warehouse and fix them. I know how to buy storage and fix it or build it. So a guy that I had went to church with for a number of years, had left his company after like 15 years, like, hey, man, let me know if you have anything. I don't know what I'm going to do. And I'm like, well, I know what you're going to do. Let's have breakfast. So had breakfast and I said, man, I just need you to handle this construction thing for me. Just be fair, put up whatever's the fair margin, 10% margin on it, and we'll start a little LLC and just do it. Like, you're going to do it. I don't have time to do it, but I need somebody to take this off.
Yeah.
And before we even had the bank account open, he was doing work for clients of mine that needed,
finish out,
doing stuff for me. And so that, in about 6 months, that was real business, And then about 6 months later, my partner called me. He's like, hey, man, I know you've been wanting to do this like capital thing. Like, what do you think if I've got this guy that used to work for HFF in Atlanta for 15 years. He's got all the debt and equity. What if we just, the three of us get together and we start a business? And I'm like, man, sounds great.
Yeah.
Got a guy on board that knows debt and equity. And, of course, resume 9 miles long, but, that didn't work. We wound up having to write him a check to get him out. But that's how it got going.
What, That's interesting because we've talked to debt and equity guys, and it seems like debt and equity guys know a lot of debt. They don't know much equity.
There aren't very many guys that are good at equity.
No. They lure you in with the equity and they hook you with debt.
Yeah.
Is the what I've seen.
There's been some really good ones out there. There's some really good debt brokers out there.
Yeah.
Equity, it's harder, and you don't know what their appetite's going to be. You don't know if the check size is too big or too small. So finding equity is just more difficult. But yeah, we haven't found anybody that's really great at that. Mm-hmm. I mean, I know some A+ debt guys and have really good relationships with some of those guys. But yeah, the equity's tougher. I think you still have to pick up me or you have to pick up the phone and go get the equity and tell the story on the deal and the story on us.
Yeah.
For now.
I totally agree. It's we're going to be hiring an internal capital markets person here towards the beginning of the year, and but essentially it's someone that can just get appointments set up for. I'm going to have to go to them. You know what I mean? But that's what they want. That's what equity wants. They want to hear it from you and hear your story and hear those things. And so, okay. So when you started, it wasn't reserve when you started, right? It was, what did you start as?
We've got a couple of different things. So we have reserve construction.
Uh-huh.
We have reserve capital.
Mm-hmm.
And we just started a thing that we're calling National iOS because we're doing some, outside storage, lot development, some spec iOS, and some build-to-suit iOS.
Yeah.
So kind of the collectivity of those things is kind of what I've got on my plate these days.
So in Reserve, you have partners in Reserve, right? And who are your partners in that?
Brant Landry is my primary partner on that.
Yep.
He also, does a lot of, has another company, SRS Industrial that he has. And anyway, it's been a good run.
So you and Brant hooked up at Transwestern together, right?
Yeah, we worked together at Transwestern, and then he, bought a company or built a company with Sharon, Sharon and Emmett.
With ERP, or was it, what was it?
ESRP.
ESRP. And then they sold to Cressa, right?
Yeah.
And then, so Brant's kind of, but that's having a great, that's a pipeline, that's, deal flow, deal knowledge. How many people work at Reserve now?
We probably got 40 or 50 people.
Wow.
Between construction and capital. It takes a lot of people.
Yeah.
But we have property managers, engineers.
You do all your in-house property management.
We have a development team. So we've got a civil engineer in-house, asset manager in-house, construction manager in-house, property managers. How many accountants do you have here?
Just one.
Yeah, well, I'm up to like 6 accountants, and that's one of the puzzling things about what we do. I can't figure out why it takes so many accountants. My team gets mad at me when I say, "Why do we need another accountant?" And they're like, "Well, trust us, we do."
Yeah, we have one. She's probably maxed out. But we also third-party management some of our stuff, so that takes some of that workload off. I kind of made a decision. We had a property manager quit, and I was kind of making that. I started to come to that fork in the road of, okay, if I'm going to get into property management, I'm going to have to really start staffing up, because that's where a majority of staff, construction and property management is where all the people part of this business is. And I had this property manager just, quit on me overnight. And, I was like, you know what? I don't need this property management. So I hired Fort, and I gave them about 250,000 feet of our portfolio, and they're doing it, and they're doing a great job. And it's, it's the multi-tenant stuff too, which is that's the biggest pain.
That's the stuff that kills you. Yeah. In the Great Recession, I started buying like little multi-tenant industrial deals. I owned half a Pioneer in Irving at one point in time.
Yeah.
7,000 footers, with 3 tenants in there, 2,500 square foot tenants. And we got to where we had, maybe we had a couple hundred tenants.
Yeah.
And my partners were 2 bankers. I'm still great friends with those guys. But I'm like, man, we can't manage all this. Yeah. So we tried to, look, it was working because we were 100% lease, just getting checks in the mail. We knew who was paying and who wasn't, but there's more to it than that. You have to collect CAMs. You have to collect rent bumps. You got to respond when things are leaking. Yeah. It's like, man, we can't, there's hundreds of tenants. It's too much for what we're doing. So we tried to outsource it to another firm to manage it, and just, you can't make money. You kind of got to be owner operator if you're going to have hundreds of 2,000 square foot tenants.
Yeah.
It's hard to outsource that because that person's not going to make any money on it.
Yeah.
So we wound up selling all that. We made good money on all of it, but I wish I could have figured out the management piece, because I bought it for 20, sold it for 60, and could have sold it for 160 if I'd held it for little 6, 7 more years.
The other issue with the small bay stuff too is finding a broker that's going to lease it. A lot of brokers lie to themselves. Yeah. Oh, I'm going to work on this. No, you ain't.
The best way I've seen that done is if you lease it and manage it yourself, and that's your thing. If you're Henry Miller,
exactly,
does a great job at that. Makes a good living, keeps the stuff full.
Yep.
Just stays on top of it. And a lot of guys that do in town that do really good at that. Wiley Brothers does a good job of that. Henry does a good job of that. There's several people that do it, but that's their thing.
Yeah. That's what, we've bought. I think we probably own, about 700,000 feet or 600,000 feet of small bay stuff. And I'm just kind of like, man, I bought it and I got it from brokers that were on their way up. And it's like, I can't replicate this business plan. Unless I just find these brokers that want to, you got to find them on their way up, because when they get 3 years in the business and they're really humming, they're like, I'm not going to show a 3,000 foot space. I get it. I even ask them, I'm like, hey, do you want to do this? They're like, everybody's like, oh yeah. It's like, man, come on, man. Like, I almost think you would have to have someone internally, like you said, that's all they do. They're the small bay leasing guy, and he goes out and does it. So we've third party a lot of that management out, and we love buying single tenants. The management on that is nowhere near the amount that the small bay stuff takes. So
yeah, totally agree with that.
And then we just raised a fund, but that's purely for first lien and pref equity for other sponsors, and that's more accounting at that point. So but that's all it is. It's not, if we're getting involved in property management, then we had the deal go wrong, because we're relying on somebody else to do that. So
yeah, I think that's smart.
Yeah.
I mean, we make money at it, but we have a lot of office.
Yeah.
If you said, do we just make money on industrial management? You got to have a lot. You got to be whole Lunsford or Trammell Crow.
Right.
You got to have a lot of big Class A product, but it's, on the office side, it's a pretty good way to make money.
That could be,
you can pass through,
profitable.
Pass through the salaries, and the fees are big, and so you can make some money there.
Well, and it's probably a lot cleaner too. Like, y'all are taking care of the air conditioner in the office. You're going to bill all the tenants for it, but like, it's not like a fight. It's pretty. And then to your point, the rents are a lot higher. And I could see managing an office making a lot of sense, but the industrial stuff, like it didn't seem like a place I wanted to spend a bunch of time, and so that's what we made that decision.
I think that's a smart decision for now.
What made you get into office?
I think just knowing that during my tenure, rents barely grew. Mm-hmm. Things sold for $20 a foot, and then $30 a foot, and then
back to 25.
Back to 25. Like, there was no breakout way to make money. The way we made money back then, you either broker deals or, as an investor, the rule was simple: you buy for $20 a foot, and you spend $2 a foot on it, you sell it for $32.
Yeah.
And before it came back down to 20, so you just kind of played in that little zone right there. So when we started, we wanted to buy industrial, but that's when cap rates, that's when we got an ultra low interest rate environment. Cap rates went 4 or 5, and we're like, we don't know how to make, our investors want to make a 17 or 18 or 20 IRR.
Right.
And I don't know how you do that on rents that don't grow very much and values that don't go up a whole lot, and then you pay a 5 cap. So we had to do something, though. We'd raise money.
Yeah.
And we got office to underwrite a little bit better.
Yeah.
And, we were wrong. Rents started growing 20% a year, and values went from 60 to, in mid hundreds. But we'd never seen it happen before.
Yeah.
So, when it started happening, people started paying that. We're like, man, there's no history to support that happening. So we bought office. There was a decent story on, 25% of replacement cost, 35% of replacement cost, which that argument was hard to make on industrial. They had selling for $65 a foot, but you can go build it for $65 a foot, Just pay replacement cost. So we did that. We bought, I think our first 3 deals were, pretty big office deals. My biggest deal up until that date may have been like $3 or $4 million. And then, we took down a $27 million office tower was our first acquisition. And it was it was a roller coaster, man. And, but it worked. We got it leased, we bought it maybe 70% leased and got it 95% leased in 12 months.
Yeah.
And, we can do this. This works. And, so we were pretty heavy there early.
Do you feel like at the end of the day, the fundamentals are the same,
for office and industrial?
For office and industrial.
I think there's a lot of more ways to lose money in office. Based on where we are right now, the amount of capital destruction that's happened in that industry it's sad, honestly, because.
But take that part out of the equation, right? That's something that's like a pandemic that just happened. I mean, we had a pandemic. That's what happened to office. Like that's not like no one underwrote that, you know. And but what I guess what I'm really trying to ask is, are the fundamentals probably the same? Get it cleaned up, get it leased, get it properly marketed, capitalize it right, know what the market rents are, and then go execute a business plan.
Yes. The thing that's different is you can just buy industrial and own it forever, and that's a pretty sound business plan.
Yeah.
You can buy it, lease it, your tenant may stay, not a lot of TI costs, maybe not, the commissions aren't that big, and you can just own it for 15 years. That's a bad strategy for office.
Okay. Why is that?
Well, because you got to pay TI again. The tenants always get $20, $30, $40, $50 TI packages, and that's coming. When that lease renewal, happens, it's coming. And in industrial, we've always had 3, 4, 5, 6, 7% vacancy rates. Well, Dallas always has a 20% vacancy rate or 17% vacancy rate. Now, our real vacancy, when you strip out the Class Bs and Cs, it's not near as bad. But the tenant rep brokers in this business are really smart, talented, savvy guys. They do a great job for their clients, but they know that they've still got the leverage. The office tenant rep guys have always had the leverage in Dallas-Fort Worth.
Yeah.
Maybe not in Uptown, maybe at certain periods of the cycle, not in Legacy. But for the most part, you remember back in the day, broke all the days when the tenant rep brokers just had all the leverage.
Oh, it was awesome.
Well, the Dallas tenant rep brokers for office pretty much have always had the leverage, and they still got it.
That was a real tough thing. So I started in 2010, and it was like you can have the building for a year for free, just so the animals don't destroy it. So it was kicking in doors, 6 months free rent, give slashing rate, all these things, and man, what a change! Because then you got to the point towards the end of when I was really brokering, that's like, I don't even feel like I'm adding value on this deal, because it's like, hey, you're taking a 60% increase, and I'm gonna try to be here to make you feel good about it.
I really wasn't involved in much of that because I'd already kind of traded in my broker's shoes. But yeah, that's a pretty tough sell when you're a tenant rep broker, and all you got to announce to your client is they just got a 60% pop in rent increase, and by the way, they had to take it.
Yeah,
that's a harder sell.
Yeah, it's a tough. Thank God the landlord pays our fees, because if I had to ask somebody for money for me to give them that opinion, I probably wouldn't have made much money.
Yeah, but man, we had a really great run in industrial. It's been cool to see it become. It's been cool to watch Dallas go from being a kind of a second-rated city 10 years ago to like the top 1 or 2 industrial markets in the country. It's been cool to see that. Then it's been cool to see industrial go from like a ghost town. Back in the early 2000s, you couldn't give a building away. Stuff was selling on Dragon for $20, $30 a foot, hollows for teens.
Yeah. And
most landlords wouldn't fix the foundation, wouldn't mow the grass.
Yeah.
Just so to see industrial go from where it was then to being, kind of a darling asset class. So those two things have been really cool to see. And, I think we got a really great future in both those.
Yeah. So, what's your outlook on office?
I think, I'm still going to the office. You and I are still in your office. So office is not dead. The biggest problem I see today with office is capital support.
Yeah.
You know what? Guess what happens to industrial if debt and equity goes away?
It's dead.
What's it worth?
Nothing.
Well, it's worth whatever cash flow you can put in your pocket. Well, it's hard to cash flow things right now with prime at 8.5, and it's office is not dead. It's exposed problems that were in our office sector before. People don't like old, dated, non-amenitized office.
Right.
That was true before COVID, and that's really just compounded that. So if you have a small building built in the 70s or 80s without amenities, it's hard to throw enough money at that, to make it relevant and get enough leasing velocity. Unless you're a boutique building in Uptown, or there are a few that will work, but there's also a lot that didn't work before and still doesn't work. And I think a lot of that product is, being torn down for multifamily or, other uses. So I think that'll help. But we leased 200,000 feet of office last quarter. So
it's awesome.
We're still leasing space, but the sentiment is worse than like the street level's kind of back. The industrial, the office center up guys have deals. We're having showings. There are even big tenants kind of showing back up in the market.
Yeah.
So good news happening, on that front. But the institutional capital has basically just said, hey, we're out, and I don't blame them. You read these press releases on buildings in San Francisco that traded for $700 a foot. Now they're trading for $70 a foot or $100 a foot.
Yeah.
And those are real dollars. You know, people have lost hundreds and hundreds and hundreds of $million dollars. And, these institutions have been along for that ride. So I do think money will be made in office. We're still a selective acquirer.
Mm-hmm.
Maybe one deal a year, one or two deals a year. And, we've kind of got a buy box that we think really works, and it's newer, bigger, and well located. And for us, it's really, is it a top 3 building in a submarket? Yes or no?
Yeah.
Check that box for me. If you're the 12th nicest building in the submarket, I don't think there's a price that I would want to pay for it.
Yeah.
But if you look at it and say, hey, I'm a top 3-4 building in Los Colinas, that building probably has a future.
Yeah.
Top 3, 4, 5 building in Richardson probably has a future. Top 3 building in Park Central probably has a future. So that's kind of our lens. But it's super hard to get capital. But I do think the capital that comes in early will have a chance to make pretty big returns. But again, that's all predicated on 3, 4, 5 years from now, kind of institutional capital flowing back in. I think that's a great idea. So I think that will happen. I think it's just going to be, it's been slow, and I think it's going to keep being slow.
Mm-hmm.
But right now, there's not enough capital support, and everybody's still trying to find the kind of value floor. And it's been a pretty precipitous decline. We bought a deal. We bought Collins Crossing, early this year. We co-GP'd it with Goldenrod, and the two comps in that market, it's over $290 and $300 a foot 18 months earlier, and we paid, low 100s or is somewhere like that. I'd have to check, but yeah, there's a lot of office trading for a third of what it would have traded for, 2 or 3 years early, and it's because there's not a deep enough buyer pool out there.
Yeah.
Right now.
What does, you got to look at some of these office owners, that are, not off a main drag. Like, we're sitting on the North Toll Road right here. Like, you were saying before, this building will always lease just because of that. But, you got a B asset sitting on, a side street or something like that. That owner's kind of like in a real conundrum, right? Because he now has to think about making the commitment to like, really modernize the office up, but like, are you even going to get the tenants there?
Well, that's the problem, and you're doing it, and it leases, and then what?
Yeah,
who's going to come buy your 80,000? I've done it. We've made those mistakes. Who's going to come buy your 80,000 footer on Coit? When you get it 90% leased?
Yeah,
that's the problem. Like, there's not a great answer. I think the answer is if you're a sponsor or a lender, and you've got a building that you think has a future. It's Class A, or you can get it to Class A and it's fully amenitized, doesn't have structural problems, and it's 20 or 25 years and newer, then I think be patient, get your lender to be patient, get your capital to be patient, and kind of trust time's going to fix that. But it's a harder decision if you have an 80s non-amenitized kind of garden deal, and you're not on, you're on Preston or Coit or Beltline or one of those things. That's a much harder thing, because every deal you make takes another $40, $50, $60 of TI and commissions and all that.
Yeah.
And what's it going to be worth? Is the building worth $60? You're paying more to get the deal than the deal's worth.
Yeah.
So that's a much harder thing to figure. And I think the answer is that's why you're seeing some of that stuff trade for land prices.
Yeah.
Because the future is multifamily or some other use. And I think that ultimately is one of the things that cleans up the vacancy rate and the supply issue in Dallas.
Okay. Sorry.
What we haven't seen really is downward pressure on rents. Every deal that we've done has been at or above pro forma rents. Now, we're giving a little more TI, but we hadn't had to come say, man, we're going to do 25% less than we underwrote just to get it full. That's really not happened.
Well, that's good.
The tenants out there have said, we'll pay the freight, but we need you to make it the way we want it.
Yeah.
So...
Okay, so I have this one theory about office, and so I'm kind of excited to get your opinion on this. I think we haven't seen the true glut of it all yet. And here's why. I think of all these large deals that were done prior to COVID, like a 5-floor plate deal, right? Mm-hmm. And those were going to be a 10-year deal. And those deals roll. They haven't rolled yet. And when they do, though, that tenant probably stays, but they don't stay in 5 floors. And you start in these office buildings, starts getting all these floors back. I haven't studied what is done, but that's just something in my mind that and it just came from, I'd rep Children's Medical Center on an industrial deal, and I was asking about an office space. They're like, oh, yeah, we got 7 floors in Trinity Towers. I'm like, you keeping that? And he's like, I doubt it. Probably keep 2, And so in my mind, I'm like, golly, how many of these ticking time bombs are out there for office? What do you think about that?
I think that's mostly true, consistent with what we've seen. I think there's also very little supply coming online. Mm-hmm. So I think that probably helps equalize some of that as corporate users give back 20, 30, 40% of space. I think the pace of that give back is slowing by the day. But I also think, if there's not much new construction, which there isn't really much new construction coming, there's, uptown, but there's still a lot of tenants that want to be down there.
Yeah.
But otherwise, there's not a ton of new construction coming. So if we could just get some positive absorption, which I think we'll probably maybe see this year and next year, then I think we're in a much better place. But you're not wrong. I mean, people still have some excess space. The bigger tenants have some excess space. Although we see a lot of small tenants that are growing. Tenants 30,000 square feet and under, have most of their people back in the office at least 3 to 4 days a week. Mm-hmm. And we also are seeing big tenants out in the market, looking for big blocks. So we'll see where it equalizes. But the good news is there are deals out there. People are. Even big companies are returning to the office in a material way, and I think that ultimately helps solve some of the industry problems.
What have you ever built an office?
No. That's not in my repertoire.
No, have you thought about it?
I have. We thought about it, but looked at it before COVID. I think we had a deal in Allen that we were looking at. And There were just a good market and no supply, but there's easier places for me to want to live than that.
Yeah.
I mean, that seems
like a lot of work.
Expensive, a lot of work. I'd rather just go buy or build some industrial, build some IOS. That's something I'm really passionate about that I really like, but probably not. That's probably not going to be our... Now, could we do a build-to-suit?
Sure.
We do a big medical office build-to-suit or something like that, maybe, but just going and building some spec offices is probably not going to ever be our deal.
Yeah. They're building... In Frisco, they're going to build $6 million a spec office up on the Fields development on each side of the toll road. Trammell Crow's doing 2.9 and someone else is doing 3, or that's what the newspaper said. Sometimes those deals don't ever come to fruition, but I was like, golly, 6 million feet of office. That's... Hey, I guess you'll know something I don't, but that's never going to be I'll go do other things in life.
Yeah, agreed.
Get to that. Tell us about your iOS stuff, because that's where we live around here. We live in a yard most of the time.
Yeah. Just by virtue of being an industrial broker for so long, we always got those calls like, hey, I like that building, but I really need one with a 2-acre yard.
Yeah.
You're like, you never call the guy back. You're like, well, there's none out there.
They don't exist.
So, I think in 2016 or 17, one of those users called me. Like, man, no, we're serious. We got to have something. I'm like, well, there is nothing, but what if I go find it and build it for you?
Yeah.
And I did. I built them a 15,000 square foot building on a real 5-acre yard. Mm-hmm. And back then the rents were huge. Like it was $15 or $20. And they looked at it and called me back in a week or two. Like, yeah, we'll do it. I was like, let's go. I've been looking for a reason because the rents weren't there. You couldn't get enough rent to go build it.
Well, I feel like no one really knew that there was value in that stuff, right? People called it iOS, and to me that was like, you mean a building on Irving Boulevard?
Yeah.
But the scarcity of that asset is what's driving those rents. I feel like, some people give me comps now, and I'm like, well, I don't care. Show me the competing options for this building. Oh, there is none. Okay, so this is my rent,
Yeah. There's a good tenant base, and they're big, well-known, name brand corporate industrial tenants.
Yep.
And that's underserved. So we basically, through me building that one and building others, and we've done several of them. I've built in several states around the country for build-a-suits for that. So got the courage to do some spec buildings like that. And then when I was done, I had like 10 people competing for it. And I was like, oh, this is nice. I've got publicly traded tenants that will pay exactly what you want and do their own, put in their own fuel stations and wash bays and all that. So, once I kind of saw that much activity kind of be there, I kind of committed to build more. I mean, it's a product type that I like, just, what I know.
Yeah.
It's underserved. They sign long-term credit leases, and, it's easy to capitalize. I don't have to bring in a bunch of LPs on that stuff. And
easy to property manage.
Yeah, easy to property manage. Triple net lease. They usually want to handle a lot of it, landscape and a lot of that tax protest, some of that stuff themselves. So, man, that's a really great business. We started another company called National IOS, and we're going to basically build out that engagement with those guys to really find out, what do you need? Where do you want to be?
Yeah.
Do you have time for us to build it for you? And at the same time, we're going to come out with, spec product around the Metroplex. Now, it may be in Melissa, or, west of Denton, or Alvarado. I mean, it's not going to be in Carrollton, by the way, right? But you can't get it there.
Well, so my example earlier, I'm talking about my building in Carrollton I'm closing on tomorrow. It's 18,000 feet on 2.5 acres. And people are like, what do you want? I go, I don't know, like $18 a foot net. They're like, that's high. I'm like, okay, compared to what? Like, go find it.
Yeah, they'll pay the rents.
Yeah.
And they'll be happy to have it. So, that's something I'm really excited about. I'm going to, like I said, I've got some spec product coming. And the stuff that we've built before, I've leased it super early.
Yeah.
And so that's something I'm excited about. And we own our own third-party construction business, so we can, civil engineer in-house, land acquisition guy in-house. Yeah. So we can basically handle that from just the dream. You can tell me, hey, Clint, I need 20,000 feet on 9 acres.
Yeah.
And then I hand it to my guys, and they've got a site identified. They've spoken to the city council. Yeah. Our civil engineer's done the flood study, the building layout, the geotech, and handed to our construction team. So really, we can be single point of contact for that kind of thing. We can build it for you. You guys come up with, roofing supply or some AC supplier, and you want to do one, call my guys, we'll help you do it.
Yeah. No, it's so y'all will go do that in any state?
Not any state. I've done it from California to Ohio. We've done it around. So, but there are some places where the juice just isn't worth the squeeze.
Okay.
But yeah, we're flexible on that. There are some places where I don't want to spend 3 years permitting a 12,000 or 20,000 or 50,000 square foot warehouse. But so we won't do it just anywhere, but there are a lot of places that we can and will do it.
What are you buying industrial assets or any other asset classes in other cities besides DFW?
Yeah. I'm buying quite a bit of industrial just around the country, but it's the stuff you buy. I got a broker in Denver that calls me, and I've kind of built some relationships over the years. He'll call me and say, "Hey man, I got a 15,000 footer on an acre.
Yeah,
I'll lease it in one day. Can you buy it? We got an end user that doesn't want to clean it out. You know?
Yeah.
So we do quite a bit of that. In maybe 6 or 7 markets.
Yeah.
Around the country. I call that my side hustle.
Yeah.
I'll pop up and buy a little deal in the design district every now and then. I got a few left in the hollow.
Yeah.
It's hard for me to kind of stomach the economics in the hollow right now.
I don't know.
I like it. I'm a believer in it, but and it's been cool to see it, become as desired as it is. But it's also I got better value propositions right now.
Yeah.
Kind of in other markets that I like. So
I just let Romy have all that stuff.
Yeah.
You're going to pay more.
Let Romy and Susan and whoever else is going to play down there do their thing.
Yeah.
I think there will be opportunity down there again. I didn't buy a deal down there for 5 or 6 years. And then, next thing you know, when I kind of got re-engaged down there, I saw stuff in Brook Hollow start going to $100 a foot, and I'm like, well, what happened in the design district?
Yeah.
And I went down there and bought some deals for $125 a foot. Used to, the design district would trade for a 3x on Brook Hollow. So when I saw that Brook Hollow go to 100 and the design district, you buy bills of levy for 125 or 135 or 145. So anyway, kind of jumped in, bought several deals down there, just thinking like, this is off. Like, this is an opportunity like that. They don't know how Hollow's pricing.
Yeah.
And if that old math holds true, these things ought to be worth 3x. And today that's probably right. Probably worth 300 down there, and they're 125 in Brook Hollow. So it's kind of renormalized, but that kind of got me kind of re-engaged in, some of these kind of new young brokers I've kind of mentored, and kind of got me re-engaged and buying some deals down there. Yeah, no, it's I don't know. I've had the same mental challenge, being like, old brokers have old pricing in their heads, and that's an issue. It's also an opportunity. Sometimes you can buy a building off old broker, and that's you can get some value in it. But I feel like I got old broker in my head for Brook Hollow. What happened to me, man. That's how we got in the office game. That's why in 2017 didn't have the courage to do it. We'd never seen rent growth, and we'd never seen 40s turn into 140s. But it's been cool to watch. Yeah. So Brook Hollow. I've kind of just. I'll let other people play down there, and I don't know if I ever buy anything down there, but we did just buy something in the design district. I bought it with Jeff. Jeff found it, and it was a deal on Slocum, and I was like, I think me and him went to Town Hearth one night, got real drunk, and then walked around the building at like 10 o'clock at night. And I was like, yeah, we're going to kill it on this. Yeah, it can happen. It can happen. But, here, I kind of like to always go into, a couple questions of, just kind of get your on the brokerage background of things, or just anything in general. But we make a lot of cold calls in this business on the brokerage side. And so what was one of your most awkward or funny cold calls you ever got into? The one that sticks out in my mind is there used to be a company called Dixon Furniture. Oh, do you remember them? I sold his building. Okay, well, I sold him that building. Okay. And he's out in Houston, right? Yeah. Yeah. He was on Chancellor Row leasing one of the Sherman Pearson buildings. Mm-hmm. He was in the worst building in Brook Hollow. And I was like, I'm going to call on this guy until he does something, because this is half the foundation was falling over, the roof leaked. I mean, I was like, this guy's going to do a real estate deal. Yeah. And every time I walked in there, get out of here. I told you don't come back. I mean, just barking at me. And, it's a couple years in the business, and I was like, I'm not going to call on this guy. And then I got back in my car. I was like, man, that's not who I am. I'm going to call on this guy. What's the worst thing you can do? Scream at me again? Yeah. I walked in there. He's like, well, I need 60,000 feet. I was like, you got to be kidding me. Yeah. After all that, you're going to talk to me? He's like, no, I'm serious. I need 60,000 feet. And I said, well, there's an auction on Saturday for 60,000 feet just up Chancellor Row. Yeah. And that was that Glen Oaks Industries that went bankrupt. They were a pants manufacturer for JCPenney's. Mm-hmm. And sure enough, there was an auction for 60,000 footer. And I'm like, well, can I register you for the auction, sir? And he's like, yeah. So, man, I got all excited. I'm like, I don't know. There'll be 20 people there or nobody there. But anyway, so me and him show up Saturday morning or Thursday morning, whatever day it was. And I was there. Jeff and Dennis Lord were there. And one other guy was there. 3 of us. There's a bankruptcy trustee and cameras, and like, guys, we're going to have an auction. We're going to sell this building today. There's no reserve, and we're going to go. And I'm thinking, man, surely this guy he's been the cheapest building in Brook Hollow, probably paying $1 rent. Yeah. I'm like, sure, this guy's not going to buy this building. And Dennis and Jeff raised their hand, and guy over there raised his hand, and this thing kind of goes around, and they take a pause, and the bankruptcy trustee makes a phone call and talks about it. He's like, guys, we're going one more minute, and then somebody's buying this thing. And at the very end, my guy hadn't raised his hand. And then at the very end, he raised his hand at $900,000 and bought a 60,000 square foot sprinkler building. Yeah. And if you remember, it had a 2-acre yard on the back of it. Yeah. That building today would have been like one of the most coveted things ever with that yard. That was awesome. So he bought it at auction for $800,000 or $900,000, $12-13 a foot. And and those auction deals are closed. Like, he closed in 2 weeks and put up firm money and all that. Yeah. And anyway, I think I got paid 3 or 4% fee. And I think that deal actually might have kept me in the business because I was probably about to run out of money. So just remember that. I'm like, well, hey, if that can happen, if I can turn that guy into get the hell out of here, into a paycheck, I'm like, I can do that again. So, that was a cold call where I'm like, man, why am I wasting my time? This guy is mean to me. He's in a worse building. They're probably going broke. And next thing you know, 30 days later, I'm getting a check out of that. So, that was one kind of story that I had. And, I was trying to get in the business about the time, Jeff was kind of at his kind of peak season at Robert Lynn. Like there was not, he was covering everything. Like he was catching every fly ball, So, I'd call somebody like, well, Jeff Mercer's my guy. Well, Jeff Mercer's my guy. Well, Jeff just sold us this bill. We don't need anything. So what I had to do is I had to start talking to people that weren't going to do anything just to make friends. I just took that approach. I'm like, man, I can't win the short game, but I'm just going to have to play the long game. So I just made buddies with the guys that didn't have money and didn't want to lease or buy anything. Or, I had a client, you remember CC Lee over on production over there on, made friends with him. I was like, I don't need anything. And 2 years later, I wound up selling, that 50,000 footer over there. And, it started, with a friendship. No deal here, right?
Yeah.
And that's kind of how I built my business. I was never, making the most calls or making the most money, but I did, I did right by my clients and did the right thing for them first, and then just stuck with it long enough. And, but the cold calling thing was always interesting. I made a cold call one time and the guy handed me a jar of jalapenos. I don't know why some food wholesaler's like, I don't need any real estate, and like handed me a jar. And so I took home this 5-gallon bucket of jalapenos. My wife thought I was crazy. Like, how'd it go today, honey? Did you make us any money? I'm like, no, but I got a 5-gallon bucket of jalapenos. Yeah. So she still makes fun of me. Same thing. I had another guy called on, and he had a warehouse full of wine. Yeah. And it's like, hey, could I give you like a pallet of wine? I'm like, man, I love wine and I'm broke, so I guess so. So get my truck over there, get this pallet of wine, get it in the house and unstack all these crates of wine. And my wife's like, did you try that? I'm like, no, but it's wine.
Yeah.
Cracked it open, it was all ruined. It's like this guy gave me
a bunch of skunk wine.
Yeah. So anyway.
Well, I want to tell you something that I learned from you, back to something you just said about, doing what's right by your client. So I have a story for you that this is something that's always resounded with me, and you taught me this. So I was listing the Rudy's Tortilla building, and you called me one day and you're like, hey, I need to tour the building today. I go, okay, cool. We got to wear hairnets and all this stuff. I go, so who's your client? And I think you knew I was going to be mad when I said this from you. Go, well, it's Larry Siegel. And I was like, that motherfucker. Like, because that guy told everybody in Brook Hollow that he wanted a building, so as soon as I got that listing, I took it straight to him. He did nothing. And I told you, I was like, man, that's bullshit. I showed that to him, And you paused and you go, well, maybe you just need to just think of it from the angle of who do you represent in this transaction? And you know what? It was a great comeback, but I was like, you know what? He's right. I don't represent Larry Siegel. I represent Rudy's Tortilla, and I'm here to sell their building. And I was like, you know what? Good point, Clint. See you at 2:00 tomorrow,
Yeah, well, that was the right thing. Yeah. I had the similar situation with you. What was the primary color guy's name? Yeah. Mark something.
Yeah.
Truan.
Yes, Mark Truan.
I had the same thing. He'd never done anything. He was leasing from Allen Cullum and talked to him pretty frequently. He's like, I'm going to buy a building from you. And he called me. He's like, hey, I'm ready to buy 40. I'm like, well, I'll pick you up this Wednesday. Like, how about I pick you up Friday? There's 4 40s on your street. What used to work is, there'd be like a glut of 40s or a glut of 20s or a glut of 10s, but never at the same time. I'm like, well, you called the right time because there's a glut of 40s out here and you're going to get one of these guys. And he's like, yep, pick me up Friday at 10. Well, you call me like, hey, I want to show a couple of your listings tomorrow at 10. So you guys showed up and guess you had Mark Truan. And I'm like, well, man, that's awesome. Like, been calling on this guy for 15 years and here he shows up with Jeremy. And I had a not so I had a friendly, not so friendly conversation with him. And I kind of told him, I'm like, hey, man, I thought we kind of had a situation where you told me you wanted me to find you a building.
Yeah.
He's like, what, are you afraid of a little competition? And I was like, I just kind of received that. I'm like, I guess he's got a point. Like, this guy just wants to buy a building. He's not thinking about who's getting paid.
So here's my stance on that. A lot of these guys, they don't want to have exclusivity and all that stuff. And for a lack of a better term, these guys make widgets.
Yeah.
They didn't get, or here's fasteners. I remember I had a fastener guy. I just gave him my exclusive. And he goes, I don't get the exclusive on all my stuff. I go, you sell fasteners, bro. Like, someone needs a screw today and they call the other screw company and they get a better price, they buy it. They call you the next day again and they need to buy another screw. You might do this once in my 20-year career. Like, this might happen one time. Like, so don't take this the wrong way, but I ain't selling fasteners here. And he wouldn't sign my tenant rep. And so I was like, I ain't working with you. And funny story down the road, me and Romy bought his building. He ended up being my tenant. But
probably got him for an extra $2 in rent or something.
But I think to your point, like talking to Mark about that was like, hey, look, man, like I only get one shot at this. And it's funny, I figured out in all that too that he was talking to other people too. Yeah. Like, and I was like, golly, I just got to show up with the right building. And it's like, that's the shitty thing that I think some people don't realize about brokerage is that, man, this is like the one, especially on the building selling side, this is like the one shot for this to happen. Like, and this could be it, and for someone to use all these different people, they end up getting kind of, they'll get their deal done. It'll happen. But like, you're not going to get the amount of service from somebody you should, and I feel like in the beginning, you'll work on a deal that you don't have control over just because you need to make a deal. But man, it's a frustrating way to live. And I don't think principals that you're representing truly understand that this might be it, man. Like,
yeah,
it's in Mark's case, hey, guess what? Someone might come to you to do a printing job again just because it went to, gigantic color last time. Like so.
Yeah, well, people forget. I mean, you may call on a guy 15 years before you make a deal.
Yeah.
Now, of recent, a bunch of those guys that never did anything, you remember Bob Jutras and all those guys that never sold?
Yeah.
Well, a lot of the reason those guys have made a lot of money down there in that market is pricing never went up, so those guys never had a reason to sell. So now that those guys' buildings are worth $125 or $135 or $145 a foot, now the guys that have never sold have sold.
Yeah.
And it's turned over a large segment of the market down there.
Yeah. Well, I remember we would move people. You would move a guy from a 20 to a 20 because there was a cost savings.
A quarter.
Yeah.
I mean, if you could get a quarter or 35 cents, your guy would move.
They would move. Now it's like the only way someone moves is if the real estate is if it's like the
dysfunctional.
The part that's screwing up the business,
Yeah.
And so, but yeah, you would move a guy from a 20 to a 20. That never happens now, And so, but that was always kind of one thing that would just drive you crazy though, man, is like you go through like, dog, like that was Larry Siegel for me, right? The same thing. I was like, man, like I came in your office, you told me bring you a deal. And it's funny. I always liked Larry. I thought he was kind of an asshole too, but I kind of liked him at the same time. And I'd always go sit there and talk to him. And
the cool thing is we were all kind of friendly competitors. Like there was nobody that really didn't like each other. I mean, we were all kind of friendly competitors. And we're like, man, I guess good for Jeremy. It's like sucks that I'm not going to get paid on calling. I've been at that guy's door 100 times, but I'm not going to make that one. You just got to roll up your sleeves and just go make the next one.
And what's funny is, I think Haynes ended up selling Larry a building. Was it you or he bought the building behind him?
I don't remember.
And I think it was Mosier that sold it to him because it was Mosier's client. So or Easterling or somebody. I don't know.
Yeah.
Someone won that ticket. You know what I mean? But all of us called on it, never won it. So
that's right.
But, and so maybe you already answered this towards the beginning, but the most unique deal you ever pulled off, was that your ambassador deal, or is there another one that?
That was a unique one. I did a lot of work at the beginning. Remember Rory Sterling?
Oh, yeah.
Remember him?
Mm-hmm. We sold his building on directors.
Yeah.
Yeah.
Yeah, that was kind of after I'd quit doing things with him. Man, I sold a ton with him. And that's a little bit how I learned also to be an investor.
Yeah.
Between doing work for him and then kind of the Dennis Lord coaching up, Jeff and myself and Chase and Moser. I kind of helped him do it. He's like, hey, he bought a 15,000 footer right across from that Pegasus Park over there for 15,000 feet for $20 a foot. Yeah. He painted the outside, painted the inside, put some metal halide is what you wanted to put back in those days, and built a little showroom. And, about 12 months later, he's like, well, put it on the market. And I'm like, well, how much? He's like, 70 a foot. And I'm like, man, nobody's ever going to pay 70 a foot. And sure enough, eventually somebody come along and he'd make a couple $100,000 and set a new comp, but nobody spent any money. I mean, nobody would go build decent office, fix the foundation, white box the warehouse, put in some lights. Nobody do that. Yeah. So, like, what do you want to do now? It's like, well, I need to go buy 25,000 feet. And then he bought that Rudy's on 535 Regal. Yeah. They were in that guy before they went to Viscount.
Yeah.
And, did that, bought it, fixed it, was in that for 2 or 3 years. And next thing you know, sold it. So kind of watching him do those trades, it was good for me because I was selling him something and then I was selling it again and then selling him something again. So, the harder part of my book of business down there was scalability. Like if you're a national tenant rep guy, you got a client, you're going to do 50 deals a year for that guy. Mm-hmm. My book of business was always, maybe that guy does one deal. Maybe Mark Truan only buys one deal in 20 years.
Yeah.
Which means you always got to be on the hunt. You got to be bird dogging all the time. And, but I think just watching those guys, add value, buy right, buy something kind of broken, fix it, do a little construction, a little value proposition. And if you have something that looks like you love it a little bit more, somebody will pay you like you love it a little bit more.
Yeah.
And I saw that kind of play out, and it turned out to make me a pretty good investor later on.
Yeah. No, that's another fact. I never did a deal with Dennis Lord.
Really?
Nope.
Yeah, Dennis was just such a kind guy, and man, he'd bring his you call him a few times, and then eventually he'd just bring you in like, let me tell you how it works around here, and he'd tell you, hey, the rents are $3 gross.
Yeah.
And if you can buy it below 20, you probably buy it. Yeah. And you spend a couple of bucks, and eventually you'll lease it for $3 gross. And then you kind of do the math on 75-cent expenses. You're like, okay, that's 10 cap.
Yeah.
And back then, interest rates were 7.5. You could go to Brook Hollow Bank, borrow 80-90% loan at 6-7.5, and you could make money.
Yeah.
And it was pretty simple. It didn't change a whole lot. Rents didn't grow. Prices went up a little bit, down a little bit, and anyway, pretty simple concept to understand. And he'd share it. He didn't keep it to himself. He believed in kind of young guys that were trying to learn down there, and I appreciated that.
I managed a lot of his stuff, but I never sold him a deal. I don't know. Yeah. I had one deal get under contract with him, and then he terminated it. It was that PS Business Interiors building next door to our studio on Iron Ridge, which he had under a contract at $17 a foot, which that's like tip of the spear now of Brook Hollow.
Yeah. He quit being active about the time did you get in 2010?
2010.
Yeah.
He kind of went through phases. He had girlfriends, Jeff and him. Jeff was his girlfriend for a long time. Then Moser was his girlfriend for a long time. You and him had a stint, I never got picked to be a girlfriend, but it's okay. I still had a good
he was
run down
active
there.
Early in my career, and then he owned a pretty decent portfolio and kind of slowed it down a little bit later, but he was good.
Here's another thing I always like to ask. What's kind of like just habits and routines, things you do on the daily that, you think make you successful?
Just some simple concepts. One thing I say, I just kind of pretend when you ask this question, I'm speaking to a bunch of 20-year-olds, things that just you need to do to make you successful. Probably people like you and I know, but those guys would want to hear, just be the same person. Be the same person at home. Be the same person with your family. Be the same person in your business. And, live an authentic life. Yeah. I think that no matter what industry you're in, that's, sound advice for your life. I think continuity for me was just a big thing. I was probably never the best broker, probably wasn't the prettiest broker, wasn't the smartest broker, wasn't the most successful broker, but man, I just decided to just keep doing it. Just stick with it. You have to have that to make it in our business. If you don't have it, you're not going to have a great career. I think another one for me is just treat everybody like a customer. Like I really have to treat you the same way I was treating a client, right? Because you never know where this world might take you. Look at us now, right? So I always kind of try to live by that. Not everybody's going to love you or think you did 100% the right thing when you negotiate a deal, but I can still treat you like I value the person that you are and the person you're trying to be, and you have a mutual respect for our industry. I think our industry as a whole is pretty good at that.
Yeah.
So that's something I tried to live by. Another thing that I think I picked up on a little bit early was there's a difference between making money and building a balance sheet. And when I bought my first deal at 26, they're like, well, send us your balance sheet. And I was like, I don't have a balance sheet. Could I send you my driver's license or something?
Yeah.
So I filled out my first balance sheet and I'm like, well, this isn't very good. So I just started thinking about, hey, I got to make ordinary income so these banks will loan me money, but I also got to build a balance sheet. And being successful in real estate is both.
Yeah.
It's if they're maybe not for everybody, but for me, it was like, hey, I need to make a decent ordinary income and build a balance sheet. There's some guys that make great ordinary incomes but don't know how to build a balance sheet, and that's fine for them. But for me, I realized I had to do both.
Yeah.
So I like, when I talk to young people, I like to say, hey guys, understand what a balance sheet is, understand how you build one. And if you really want to be an investor, you got to start thinking about that earlier rather than later.
Yeah.
I think another one for me is, if you have an investor lens on, who can overpay?
Yeah.
Anybody. Anybody can overpay, right? So a guy sends me a deal and he doesn't like my answer. I'm like, well, man, I just don't want to overpay. And he's like, yeah, but it's a deal. I'm like, well, I don't want just a deal.
Yeah.
I want a deal where I can look myself and my lender and my partners in the mirror and think there's a value proposition here.
Yeah.
So, I think in the world of brokers, we have a tendency to kind of get lazy, like, hey, let me just send them a brochure. Like, that's not the way it works. You don't raise money on an email. You don't sell a deal on an email. You pick up the phone. I call you and say, Jeremy Mercer, I got this great deal. And here's the story. And here's its limitations. And here's why it's great. And here are 8 comps. And here's why you got to buy it. Right. If you can do all that, I'll give you a yes or no on the spot.
Yeah. That's what I was at Jeff's house, his ranch this weekend. We were in the Mercer company dove hunting. This kid, a young broker out of Oklahoma City office. He's like, hey, I got this deal I want to send you. I said, let me tell you. I go, I want you to learn how to send a deal, because most guys your age will just flip us an email and say, hey, you want to buy this? I go, and I just sat there. I was like, you need to send I go, I'm going to copy on an email to Will and Dylan. And I go, and if you want to get their attention, you need to send them an email like this. They see so many deals that are garbage that when someone actually puts some thought into it, you'll get a response either way. But like, if you just be like, hey, here's building, want to buy it? Like, what do I do with that?
When we bought our first office deal, Nora Hogan at Transwestern put together the most detailed, informative email on, hey, here's an office building off market. Here's the history on the guy that owns it. Here's what's great about it. Here's what the tenants are doing. Here are 4 comps. Here's what I think you got to offer on it. I didn't know if it was a great deal or not. But after looking at her email, I'm like, hey, she's a tenured office tenant broker. She believes in this building. She's got clients in this building. She knows the seller. And she came with a real value, and I bought it. She knew better than I did if it was a great deal or not.
Sure.
And I think that when you got to put that lens on, like, hey, I got to make it easy for Jeremy to understand why would I do this? You know?
Well, and what's nice now is the guys that have taken the time to do that, like when they send me that email still now, I don't even read it. I'm like, when do you want to go look at it? Because I'm like, I know you've already thought through all this and like you understand what I got to do. I read it, but I don't have to like study it that hard and be like, okay, man, you got the deal. Okay, cool. Let's go talk about this. Like, it's a lot quicker conversation to a yes or a no once we've had the reps.
Yeah, for sure.
So, well, what about a book? Is there any book or anything that you've read that was pretty impactful on you?
I wrote down 3.
Okay.
So about 10 years ago, my buddy asked me, he's like, what are you doing? Like, what are you studying spiritually? I'm like, well, not a lot. He's like, well, I got something for you. I mean, I've been a believer since I was 13, but he turned me on this book called Bible in 24 Hours. I was like, man, this sounds kind of gimmicky, but he's like,
6-minute abs. Wait, 5-minute abs.
24 hours. He's like, it's going to be awesome. So he handed me a CD back when that was a thing.
Yeah.
I put it in as the most fascinating thing, most fascinating approach to the Bible that really got me kind of re-engaged in my faith. So, man, I pass that along to guys now. And like, man, I feel like I'm kind of stuck. I feel like I'm not serious about my faith, or God's not using me. And I'm like, well, maybe just do this. It's an audio book you can buy for $20. Like, why don't you just try that and like talk to me, like have a dialogue. And so that's one that I think really has changed my life and other guys' life, just on, kind of how we live and why we live and kind of worldview, and really kind of getting some key points in the Bible, if from maybe guys that don't have faith, or guys that, just are kind of stuck and kind of want to re-engage. So that's been a good one. I'm not a huge history buff, but a buddy of mine, Greg Bonner, gave me a book a couple years ago called Empire of the Summer Moon.
Oh, okay. That's a movie.
I haven't watched the movie, but
Christian Bale is a kid in the movie.
Really?
Yeah.
And it's about the
wait, I'm thinking Empire of the Sun. Empire of the Summer Moon. The eradication of the Comanche Indian and the formation of the Texas Rangers.
And I have a ranch out in Seymour, Texas. It's great out there. But we forget that the Comanche, you couldn't go west of Fort Worth until 1880, or you were going to be raped or killed.
Yeah, scalped.
Yeah. So, and they controlled from Mexico to California up through Wyoming. So, I mean, they had possession of 40, 50% of the country until 1880.
Yeah.
Right? Well, in the kind of Northeast, we're building skyscrapers and steel mills and all that stuff. Well, this really was the Wild West.
Yeah.
And it was stopped at Fort Worth.
Yep.
Right? So, that book, I think, is just a fascinating
I read that book. It is insane.
Yes.
It is insane.
So, it's a good one about Texas history. My family is actually from kind of Woodson, Throckmorton, Seymour, kind of in that area. So that was just kind of a fascinating one. Like, we're right here on the precipice of like, why is there no old stuff west of Fort Worth? Well, that's why. You know? So that one, and
let me tell you one thing that's very interesting, though. Do you know the author is S.G. Wynn, who wrote that book? He wrote another book. It's called The Perfect Pass. Have you seen this book?
I have not.
It's about it's how they formed the air raid offense, how Mike Leach and Hal Mumme formed the air raid offense. That's all it's about. It's awesome. And the first chapter is the breakdown of the last 6 plays of the Texas Tech game and how Michael Crabtree got that catch. That's all it is. But and that author, like, he's from Ohio.
Yeah.
But Empire of the Summer Moon was, man, like, it is like rape, murder, burn everything down. Rape, murder, burn everything down. Like, I mean, it was intense.
Yeah, so, I mean, we get the bright idea to do something, and our lives aren't at stake. Back then, you get the bright idea to go do something. You're not starting a private equity company. You're moving west and trying to get more land. Well, the thing coming at you is not high interest rates. The thing coming at you is Comanches to rape and kill your wife and children.
Well, and the cool thing about that book was how the Texas Rangers formed. That's why the Texas Rangers formed. So it was to go to eradicate these people. And then Quanah Parker ended up,
my family I bought some land in Woodson, and it was the Parker Ranch. So one of the descendants, and my great grandfather was from Woodson. He was a Riley from Woodson, and he married my grandmother, was a Parker, who was a descendant of Quanah Parker.
So I think Taylor Sheridan has the rights now, and he's going to make a movie about that book. That's what I've heard.
Yeah,
that would make sense. That would be the guy to do it.
That was going to sell for sure.
Yeah.
And then for real estate, I thought about this. There's a lot of great ones, but I'm a master builder by the Trammell Crow.
I have not read that yet, but I want to read that.
I don't even know if you could buy it anymore.
Yeah.
But that's the best one for me by far. Number one, he invented our industry.
Yeah.
Number two, he was building in the floodplain on Dragon, Slocum, Levee, Hillman, Gil Thomas. They were like borrowing 90, 100% money back before banks would even let you do that, and turned it into a global empire. The Trade Mart, global. He built things around the world, and man, that's a game changer book. You got to get it on your list. But, Master Builder.
That's awesome. No, I want to read that one for sure. Yep. Well, man, this has been really cool. A little trip down memory lane. It's great to reconnect. We haven't talked. I know we've probably traded an email or two, but but man, it's I'm so excited for you and all the it's awesome that you made that transition and it been so successful. So that's great to see, man. I'm just really happy for you, and it's fun to reconnect and maybe have you build me a building.
Yeah, I'd love to do that. Thanks, Jeremy. Yeah, we got I've been fortunate to just be in this industry. Yeah. We got a lot of great people. I mean, it's just kind of one of the blessings of my life to just be able to be in this business and do what we do. And, I love doing deals and I love people. Yep. And it's just a fun place to do business and make money.
Absolutely. Absolutely.
Right. Thanks, Jeremy.
Clint Riley, everybody. Thanks.